Today in the grain market, soybeans were a little bit easier today. Those China buys are still behind the forecast to fulfill that phase one trade deal. So I think that that's kind of sitting on the futures a little bit or keeping it from making any kind of a significant move to the upside. The US dollar was a little bit lower. Maybe that might hold the market up a little bit as well. But we're really looking for the acreage report that's coming on June 30th. And between now and then, it looks like weather is going to be the story of the day. Now, today, corn was lower. The crop progress report was really in pretty good shape right now. And the weather looks good for the foreseeable future. But with that in mind, the recent, uptrend for corn, as small as it has been, is still intact. So there's a possibility that that market's just going to continue to move a little bit higher, even though we had somewhat of a pullback today. But the rebound that happened midday after the market opened a little bit lower, I think might be a little bit of a tell what's going to happen really for the rest of the week. Now, wheat was steady as well. The futures just show that that $5 benchmark is really a fair value number. Now, even though the Chicago and Kansas City wheat might have been a little bit easier early on, Minneapolis wheat did have somewhat of a good outcome today. Now, one thing to remember is that Trader Commitment Report came out and just told us that there's been some funds that are covering their shorts. If that's a little bit of a tell as to where the market's going and we get a continuation of this, this really could offer some underlying support to the market, and maybe this $5 benchmark is a kind of like a springboard for the market to start to move higher. But until something else happens, it's difficult to tell. As the economies open up, I think that's going to give us the best idea of the market direction if we can start to get things back to business as usual.